There's a lot of impact of deferred taxes and impairment. So the cash profit per share is about 2.2 baht. The net operating debt over equity is about 1.2 times, dropped from 1.3 as on 31st December 13. Company has a very strong liquidity as we have structured our finances in such a way the long-term loans are funding part of our working capital requirements. So the liquidity is about $800 million as on 31st December 13. The pro forma capacity is about 7.6 million tons. This is basically including all the capacities in all the product line. We are very proud that we follow the highest degree of corporate governance, and we were awarded this highest corporate governance rating awarded by IOD. The TRIS recently reaffirmed the A+ credit rating for us. So this is the key financial highlights of 2013. If you go to the second slide, our revenue was 229 billion versus 210 billion for the last year. Core EBITDA was 15 billion nearly versus 14.3. Depreciation 7 billion versus 6.7. Core EBIT was 7.9 versus 7.6. Interest 3.6 billion versus 3.175. And core profit before tax was 4.28 versus 4.44 billion. The current tax rate was only 7%. We expect to maintain this current tax rate because we are doing the regional operating headquarters, which will reduce our current tax rate. The deferred tax was 991 million, which is non-cash. Core profit before JV and MI is nearly 3 billion, 2.99. The joint ventures continue to have issues, particularly Polyprima and Otana, and we'll talk about it, that what strategic steps are being taken. The Trivira assets has done much better now. So Trivira assets has been turned around and they are consolidated as a overall. The minority interest is 191 million. The core net profit is about 2 billion. The total capex investment which we made was 6.88 and the net operating debt is about 72.99 billion. The total equity shareholders funds is 61.6. You can see a big increase, 56.5 to 61.5. There is a currency translation gain because we have invested in euro and US dollar as Thai baht. This doesn't come through the profit loss. Straightway goes into the equity counting, and that impact was about
4.5 billion.
4.5 billion baht on the currency translation. Net operating debt to equity is 1.2 versus 1.3. However, in the trough of the cycle, the net operating return on capital employed is about 6%, which is not at all satisfactory, because of very tough margins, particularly in the PTA business, is 6%. If you look at the extraordinary items, our core net profit is 2 billion, but we did suffer an inventory loss of 928 million versus 76. Basically, this inventory loss is when the market is dropping, the inventories have to be valued at the mark to market, and as a result, this valuation loss comes in. The paraxylene prices dropped in 13, and that suffered 928 million. Our extraordinary items were total 192 million, which consisted of 32 million acquisition expenses reversal. There was an 87 million gain on bargain purchase, which was basically Trivira consolidation. We got our insurance claims for the flood, 791. We impaired the Otana assets partially, 385 million. If you remember, Otana assets, actually we acquired in 11, right? Or 10?
10.
11. 10. Where we had a big negative goodwill because that time the market was very good. So it's a non-cash item which has been impaired. This is not a cash loss because we never paid for this. The restructuring expenses, we refinanced our US debt. That's why we had to write off the entire front-end fees and all the other prepaid expenses of 320. And the Workington mothball was completed with 94 million. This is the cash which was paid for the severance. And the other gains were 81, so the net profit was 1.32 billion. And next year, we expect some small insurance claims. Other than that, there are not expected to be any major extraordinary, maybe some positive goodwills or negative goodwill. If we come to the next slide, cash flow, our operational cash flow is $441 million. This is the EBITDA to debt tally. That 14 billion was EBITDA. Our cash tax was 497. So cash inflow was 13.5 and net working capital is about 3.1 billion. It was an increase because of the increase in the operations. So total cash inflow was 10.3 and our maintenance capex consumed 1.3 Growth and investment capex 5.5. Net financial cost was 3.9. We paid the dividend at 1.6 billion, and effect of foreign exchange is 2.8. So net increase in debt is 4.9, while in dollar terms the debt went down by $15 million. The reason between dollar going down and baht going up is because of that baht has weakened over the year in 13. So if you see consistently for 4 years, the operational cash flow has been very strong. Of course, 2011 was the highest when we had the highest earning. You may have a question, certainly, that company has been doing so extremely well, why the EBITDAs have dropped. So we try to put this chart here to show a comparison between 11 and 13, that what was 2011 EBITDA and what is 2013. If you see, in 2011 we made $550 million of EBITDA. Between 11 and 13, $300 million has gone as a loss in the margin, and 90% is in PTA. So PTA business is the one which hurt us very badly. Today the entire industry is operating below cash cost. We will explain you. This is because there is a huge overhang of the capacity. Last 2 years the industry is suffering heavily. There is some light at the end of the tunnel as there is a rationalization of the assets. So we believe, so you can understand that 90% of margin loss, more than 90% is PTA business. But with management gains, we could reduce the cost of delivery by 40 million. We could increase the volume in the old assets, operating of old assets, 46 million. And the new acquisitions which we made, Fiber Vision in hygiene fiber, EOEG, which is a very timely acquisition in United States, Wellman is about 146. So actually, all these new acquisitions has yielded, otherwise the situation would have been even worse. And so this gives you a reconciliation between the EBITDA of 11 to 13, where we landed with core EBITDA of 487. I can certainly tell you that we are at the bottom of our earnings. They are the trough of the, all the margins, which particularly in the PTA side. If you look at the next slide, which gives you 12 to 13, what went between 12 to 13, 461 to 487. Again, the volume increase gave us 37 million. But again, $50 million was the margin lower, and 80% again went in PTA in 13 versus 12. And we could reduce the cost of delivery by $38 million. So the EBITDA became, core EBITDA is 487. Of course, the inventory less of 31. So these two slides give you what exactly transpired between 11 and 13. If the PTA margins would have remained even same or even lower than that, 200 million higher EBITDA would have been there. So the big earning catalyst will be the PTA margin. But as you know, the group is diversifying heavily into high value added products and less dependence on this PTA business. If you come to the next slide, this gives you the volume, 5.8 million, 50% PET, 60% fibers, 34% feedstock. The HVA is a major focus, which increased from 17 to 19%. And as you can see, the Asia volumes were 45%, Europe is about 24%, and North America is 31%. The next slide tells you about the revenue breakdown, and $7.5 billion. If you can see, PET is the major contributor of the revenue, 64%, fibers 21%, and feedstock 15%. And the high value added products is gone up from 24 to 27%. So the focus remains on high value added products. And Asia is about 26%, Europe 36%. So it's pretty line with last year, and the revenue increase was about 700 million. If you look at the EBITDA breakdown, how the EBITDA breakdown has been, the PET remains the major contributor of the EBITDA, 51%, fibers 19%, feedstock 30%, and the high value added product 34% EBITDA contribution. Now this includes all the value added products, and 66% is commodities. So the reliance on HVA is increasing, and the Asia, as you can see, the Asian contribution has significantly increased as compared to last year, from 16% to 28%. So the Asia is recovering, and that's the good news, because if the Asia is recovering, it benefits Europe and United States also, because it works on import parity. And Europe was the toughest for us because of the drop in the duties in PET. So it dropped from 22% to 16%. And I think This year also Europe will remain low.